Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. Now, we have some interesting stuff going on. Yesterday, we had a light volume day. Markets still ended generally negative on the day. And today, we started pre-market looking like an up day, but now it is flat to negative again. So is this profit taking ahead of NVIDIA? Or is this sellers, big money sellers, starting to say markets have rallied back too much and we need to start getting out ahead of NVIDIA, ahead of PCE on Friday, jobless claims on Thursday, and other big earnings this week? All right, so we're going to get into the in-depth analysis here. Let's take a look at the pre-market action. This is where the S&P or the spiders closed yesterday. So what we can see is that after hours yesterday, we were kind of chopping sideways. 4 in the morning right here, this is when the SPY begins trading pre-market. We can see it was initially up and then look, faded to the downside. So essentially a kind of a wave to the downside here. Now listen, we aren't down a ton, and I want to be clear on this. It would be super unusual to sell off majorly ahead of NVIDIA earnings, ahead of the PCE data. But again, to fade a little bit makes a lot of sense because remember, the NASDAQ rallied like something like 15%. Off of those August 5th lows. The S&P was up about 10%. So after such massive moves, there's going to be certain individuals that say, hey, listen, things have gotten really overdone in the short term. Maybe it's time to take a little bit of profits. And that's where you get these kind of little bit of a fade type moves on the market in the pre-session and during market hours. All right, now just looking at the daily chart here of the S&P 500 or the spiders, we can see that we are hovering very, very close to our all-time highs. All right, so we have our all-time high right up here. We draw that line across, and we basically kissed that line. So you do have somewhat of a double top. That was at yesterday's open higher right up here. And in general, double tops are technical resistance points. So in general, if you see a trend line, like let's say you come up here, you pull back, you come up here, that's oftentimes a selling opportunity where you get rejected. And the idea here is that you have a bunch of sellers that were buying at all-time highs, and they got crushed when the market dipped like this. And so a lot of them are saying, hey, you know, they pray to the stock gods, and they say, hey, if I could just get back to break even, I'll take my money off the table. And so what happens is as it comes back up here, they all say, oh my goodness, I got back to break even. I'm going to sell into that, and that's where it comes down. Now, it's not to say that after it comes down, it can't break out to the upside, but in general, you get a little check back at the very least off of a double top, and then it's either further downside or it starts to push up and can break out. All right, so just something to keep an eye on there as the market dives into whether or not it can break out to the upside. Now, interestingly enough, the NASDAQ has underperformed, right? So if we look at the spiders in the S&P or off of the S&P, we can see very clearly that the NASDAQ 100, there's your double top. We're not even close to that, right? We're way down here. So the recovery on the NASDAQ has been much weaker, which implies potential further downside. So in general, when you're looking at charts and you have apples to apples, right, you say, okay, well, which one is stronger? Well, right now, for the first time in a while, the S&P is stronger. Now, that might be because oil has rallied in the last few days that has kept the S&P up with oil stocks in them. It could be industrials. We know that financials have done really well. JP Morgan's chart, for instance, is essentially at all-time highs and hitting all-time highs almost every single day. So I think, again, we're starting to see this rotation where a lot of the big cap tech, they've bounced, and they've bounced big, but they're not back to all-time highs. But you look at things like JP Morgan Chase, and JPM is at an all-time high. And if I bring up the JPM chart here, you can see up here, and I've drawn in a bunch of trend lines here to just show how much resistance there is. But again, JP Morgan Chase, here was your previous high, here was your August 5th low, and look, we made a new all-time high right there. So again, even though it's up into resistance on JPM, it did make a new all-time high. That is a component of the S&P 500, but not a component of the NASDAQ 100, all right? And again, I did nibble on a little short yesterday on JP Morgan, just based on how overdone it is to the upside, and you see all of these trend lines converging right up in that upper range. Now, one stock in motion today, guys, is Cava. Now, Cava, again, this is one that I have short with members of Smart Money stocks and ETFs. We are in the money today based on where it's trading, and I want to talk you through this. So number one, on a technical basis, if we take this low here going back to early this year, essentially, you can see that essentially it kept on bobbing up against this area. It then broke down, but then from the underbelly, it was kind of going like this, like up into it. Then it had the bigger fall. But what's amazing about this is that from this low here, this was a 76% rally in the stock. Now, if you look at fundamentals, and I'm more of a technical guy, but every once in a while, it does help to reinforce things if things get so out of whack on the fundamental side. This is a Mediterranean fast casual restaurant, right? And it's super popular where it is. But if you take the market cap of the stock when it was up here, okay, and they just reported earnings, that's why it had this big pop up. If you take that market cap, I think it's $12 billion or $14 billion, and you divide it by all the stores that they have, each store was valued at about $40 million based on the amount of stores they had. In other words, they don't have a lot of stores, but it's just become so popular that it's had this monster move to the upside where each individual store is, again, valued at $40 million. Now, $40 million is wacky, right? I mean, even $4 million per store is probably excessive. But nonetheless, that's the valuation insanity. Now, interestingly enough, I saw this and I saw the trend line and we shorted it in the Smart Money Crypto Service. And if we look at the chart pre-market today, take a look at what it is doing. It's trading basically around 115 because of this dip yesterday after hours. Now, what ended up happening here? Well, simply put, insiders, including the CEO, started unloading stock. And you can't blame them. The valuation is insane. It's going to take them years to grow into the valuation with tons of new store openings. And maybe at some point they grow into that valuation. But essentially after that big move up, you've seen the stock essentially pull forward all of that valuation and that gain in market share, if you will, that would occur over the next couple of years. So there's probably somewhat limited amounts of upside in the stock, and I think the insiders are seeing that and they're dumping into that. So interesting little movement there. And listen, there's not a lot of stocks making big moves today, but this was one of them, and again, puts us in the money nicely on that trade setup. Now, just quickly looking at NVIDIA, since NVIDIA does have earnings, we do see NVIDIA rolling over pre-market here. So if we look at this again, NVIDIA had this big dump early, and then yesterday it kind of closed right here. Sideways chop, a little bit of upside early, and then is rolled over. Now, NVIDIA, again, has those earnings tomorrow after the bell. I'll go more in depth on those earnings numbers tomorrow in the game plan ahead of those earnings. But if we flip back to the daily chart, one thing that I've shown you guys, and I showed you this yesterday, NVIDIA is dealing with technical resistance. Major high right here, then the low, 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 and high, and high, and high, and high, right? All those little areas right there. And then again, you have the beautiful parallel right down here. So the key that I'm still debating this, guys, and I want to show you that there's no perfect answer, right? All I can do as a trader, as an investor, is essentially look at different potential setups or movements and decide what the probability is for each. And so that's what I'm doing here, right? We're looking at a big move up. Is this bullish consolidation, which could lead to a move like that, or is it going to get rejected and go down like this? And we may not know the answer until we see the movement on earnings after the bell, but I think it's important for us to be honest about the charts and say, hey, listen, there's two potential scenarios here. Both are semi-possible outcomes. Now, if you ask me where NVIDIA is a year or 2 years from now, I think it's much, much lower. But I still think in the short term, they probably will have blockbuster earnings. The question is going to be, what is guidance? Guidance is everything here, guys. Everyone knows they're going to have blockbuster earnings, right? It's about, what do they say? Is there any margin compression? Are margins coming down? Is their growth rate slowing? That's going to be something that we watch closely. All right. On that note, folks, I'm going to flip over and we're going to do our drawing. Yesterday, we did have the 1 minute scalpel one on the wheel, so we're going to find out who wins the 1 minute scalpel. That's Dr. B's amazing course that teaches you how to trade off of the 1 minute. It sounds fast-paced, but still, what he does, not that. I mean, it's fast-paced, but it's still very, very doable. Oh, and I apologize there. It was going as it was spinning. Today's winner, Surgical Strike 1. Welcome to the group of winners. Surgical Strike 1. Reach out to support@verifiedinvesting.com. All right, follow me over here, guys. We're going to do our quick spin to find out what the next win is. Oh, nice. So there it is. TradingView, one of our wonderful sponsors on our A Wheel of Appreciation, which is like loving giving back to members as well. 1-year membership, guys. I think that's worth about $800, $700 if I remember correctly. So again, we will draw tomorrow for that. And again, that's the TradingView 1-year membership. And listen, if you're into charts, if you're into trading, this is a great thing to win. And if you already have TradingView, it'll just get added on to whatever subscription you have, and it'll just keep going and going like the Energizer Bunny. All right, what we're going to do quickly now, guys, and I'm going to get into a bunch of crypto charts in just a few minutes. I want to look at more than just Bitcoin today, for instance, but we are going to take just a quick 30 to 45-second break to take a look at Smart Money Crypto. Take it away. Hey everybody, my name is Gareth Soloway and this is Smart Money Crypto. In this service, you're going to get trade signals, buy levels, sell levels, everything you need to be able to conquer the crypto markets. In addition, videos almost every single day, probably 6 days a week. So literally, you're going to get them even on the weekends. In addition, what do? I post up chart levels, constant flow of information from me to you, morning, noon, night, weekends, whatever it is. I am there scanning charts, finding the technical analysis and data points to give you. This isn't about meme coins. This isn't about hype. This is the data just for you guys to be able to conquer the crypto markets. All right, guys, we are back. We're going to take a look at Bitcoin, which continues to pull back. And again, this is something that's very important to take note of, and I went over this yesterday, but it's worth going over again. So we have our key pivot line, right here. Our pivot line we did push through. Now that's good, but it's not great, and I'm going to tell you why. Because we so far have not confirmed above the high of that day. Therefore, what does that mean? It means that this level isn't major support, it's minor. And minor, I'll do a small m. If it was major, it would be like a big M like that. So only minor support at this level unless it confirms, in which case this solidifies as major technical support. All right, so as it comes back in, the question is, can it hold the minor support level if it starts tagging the 61,500 level, or does it break through? I said this yesterday, I'll say it again. The bulls have a chance here. All right, you have a chance if you're the bulls out there. If you're the masses out there that are loving this and wanting this to go up in the short term, I think longer term it's going up either way, but in the short term, you have a chance here to push it up. You're above the pivot line. If we establish ourselves back below the pivot line, that makes it a lot harder. The bears will feel emboldened, and obviously the bulls will start questioning the narrative here in the short term, and that could make us go back down into this range. So right now, we are above the pivot line. That's good to be, but we need to confirm. It is unconfirmed right now. Let's see what happens if it pulls back into that 61,500 level. Looking at Ethereum, Ethereum had this little bit of a wedge breakout in the near term. It couldn't even get to the pivot line. To be honest, if you look at this chart compared to a lot of the other altcoins, Ethereum is underperforming massively right now. Now, it's not to say that Ethereum can't get its mojo and start to push up, but again, not good to see. I mean, it had the breakout here, never confirmed, and then look, it's sliding back into this level. Now, by the end of the day, maybe it closes back above this range. What you don't want to see is you don't want to see it close below the bottom line here. If it closes back below there, basically back below, I think around 2,600, that would be a big concern that Ethereum then could start trading towards the $2,000 level down here. So again, a little bit disappointing in terms of Ethereum. Couldn't even touch the pivot line versus at least Bitcoin has gotten above it. Granted, not confirmed. But again, just shows relative weakness on the Ethereum chart. Now, one chart that I took with Smart Money Crypto members recently, we shorted. Now, we were long Avalanche. We took amazing profits on it, and then we flipped it around into a short. And I want to show you why. And again, remember that everything that I do, everything that Verified Investing is about, isn't about what we feel, what we want. No, it's about data and charts. Because if we ignore our emotion and we just focus on the data and the charts, we make decisions that are logical and based on probability. And that's essentially what this is. So when we were looking at Avalanche coming down here, it was a no-brainer to buy it right here. Low trend line going way far back. I mean, really beautifully back here, right? So we buy here, and then ultimately, as it rallies up, take profits, it comes into this level. What do? Well, logically speaking, you pull the trigger on a short. And sure enough, as it comes down, that's exactly what it's doing now. And so again, we're already about $2 in the money on this short after making money on the long. And remember, this is the beauty of swing trading. And for those of you that don't know what swing trading is shorter term investing. It's not day trading. Day trading is holding intraday, right? Only being in and out the same day. Swing trading is holding for days or weeks, occasionally a little bit longer, but it's essentially not long-term investing. And the idea behind swing trading is that when you get stocks or crypto that are in a range, right? So you get something like this, right? If you're a buyer and you're a long-term holder and you bought here, well, what are you doing? If you're just holding over all of this period, all of these ups and down moves, you're basically break even. But if you're a swing trader and you buy support, sell resistance, buy support, sell resistance, you're able to net, let's say 10%, and this is just on longs as well, but you can go short here and then cover down here and even get another 10%, right? So that's the idea behind swing trading, is that it's much more aggressive in that way of trying to generate income while charts are just chopping around. Now, if you're a long-term investor, that's okay too, because in general, assuming you have a good asset, it's up and to the right over time, right? But you know how many times I've seen, and I remember this vividly, in 07, there were so many people that were saying, wow, I think I can retire early, or I can retire, my 401ks, my IRAs are amazing. And then what ended up happening was, this was leading up to 07, is that in 08, it went like this. And they saw their savings and their retirement wiped out. Very, very sad. The biggest issue is this, is that markets have a tendency to push you to your limits. They push me to my limits, they push all of us to our limits. That's what markets do. It's almost like it's an entity that's alive and it just knows the buttons to press. But essentially what we saw here is that people that had their 401ks invested that were long-term investors, as the market came down, it got down so bad where they had so little money left that they panicked and they got out at the lows. And that's the way the market works, unfortunately. It just is the nature of the beast. And so not only did we see them, being not able to retire, but then they took away the opportunity to get it back because the market, and you could say, well, why don't they just hold it long term? Well, that's easy to say when unless you have, $500,000 in the market and you watch it go back to about 100,000. And then, it's a lot harder when that emotion is inside of you to say, oh, well, why don't they just leave it? Well, because they're thinking that, oh my goodness, at least I have 100,000. What if it goes here and I only have 5,000 left, right? And so again, when you're in that situation, it's a lot different. Some of us have been in that situation in terms of what happens. So yes, the market overall goes up over the longer term, and we've seen that from 08, 09. But again, it's the emotional roller coaster of, oh my goodness, I can't retire anymore, that really traps people. And that's one of the reasons why I'm a big fan of long-term investing, yes, but also swing trading. Swing trading generates income on a weekly, monthly basis, while long-term investing is a tuck-away type thing. And that's what we do here at Verified Investing. We're much more on the swing trade side, teaching people how to use charts to really maximize income. All right. Let's take a look at gold real quick here. We'll see, go to gold here. Now, gold yesterday is fascinating, right? So we have this trend line, right? And look at this, guys. Look at this. High pivot, high pivot, high pivot. Extend the trend line out. We closed above, didn't confirm. Closed above, didn't confirm. Ultimately, we didn't confirm here. I am still in the camp that gold is going to have a pullback before its next leg up. I could be wrong. We'll find out with the PCE data on Friday, but I'm looking at an RSI. I'm not going to throw the RSI up here, but there's no doubt that the RSI is showing a negative divergence versus price going higher, right? And so again, the negative divergence on the RSI has me wondering if they're trying to lure in a bunch of longs here, then flush it down, maybe just down here, before then taking it up massively to the upside. So again, if it pulls back, I'm just going to be a buyer on pullbacks for gold. We'll watch and see. Silver today, flat on the day, not much going on there. Resistance right here, that remains. We're just shy of that. Silver is short-term overbought just a little bit. Hopefully we can get one more push up. I have a small position. We're in the money on silver in my commodity service, but I'm still looking to see if we can just get up in this vicinity right here. And then the last couple here is oil, guys. Excuse me. Yesterday, I did take a position in my commodity service on the short side of oil. This is, again, we talked about this, how when you have a trend line, right? So let's do a little education here. Here's a trend line. Once, twice, three times. Fourth hit is a 50-50. Whether you break or not is generally a 50-50, and my 50-50 is not the greatest there. In this case, we bounced, right? And so you usually get a retrace, and then on the fifth hit, the odds of a break are about 70%. So for me at least, sure, could oil go up here? Yeah, it could. But I started a small position, which will let me maneuver, add here, if need be. But I wanted skin in the game for the bigger breakdown that I think is going to occur on oil. Okay? And then lastly, natural gas. As always, I know there's a lot of people that love trading this because I guess they like the widowmaker aspect of it. I don't know. I trade it too, to be fair, so it's a great volatile move. You can make a lot of money or lose a lot of money, but if you use the charts, I think you'll generally come out ahead. This is what we did here, right? So we bought down here, 786 fib, unloaded right over here, chopped around, never confirmed. Now it's coming back in. Target zone, longer term trend line, basically just below $2 would be our support. Now, could it break that support? The answer is yes, but you would trust or at least give it the benefit of the doubt until it breaks. And then you can always use a stop and stop out quickly if that's what ends up happening. But right now, it's a no touch for me until it comes down to this level, and then I have the technicals to back up if I decide to go long versus just guessing at an arbitrary level, right? And again, remember, going long something just because you like it doesn't really cut the cheese, right? It doesn't make sense. You have to have factors behind it, ideally more than one. One factor is going to get you 60-40 odds. I like being in the 70% plus success rate range on probabilities, and that's, again, where you get multiple factors to align. The more factors, the more high probability that trade is. All right, guys, I'm going to get going. Got to get to my trading floor, the Apex Live Day Trading Room. As always, thank you so much for watching and supporting us here at Verified Investing. I hope you learned something today, and I hope you, again, have a wonderful day. Have a good one. Take care.